Now, a lot of the auto insurers are up this year, in part because people aren't driving as much. And the theory is if you don't drive as much, it's hard to have an accident. So I presume there are fewer people claiming that they've had an accident, and therefore you don't have to pay out as much. Is that why your stock is up, you think?
I think that might be one piece, but I think we've also continued to grow not only market share, based on units, based on policies in force, and really, if you think about it, yes, immediately in March, vehicle miles traveled have been reduced and losses went for that. But as states have reopened, it continues to go up, and right now we're still not pre-COVID level of driving. We're about 8 to 10% down, but those lost costs, that gap is closing in because we're seeing more and more people driving more often. And so that lasted a couple of months. And then remember, many companies gave back credits or have reduced rates.
Now, let me ask you about that. If you get a rebate, that was because you voluntarily thought it was a good idea, or the regulators said you have to give back money. Why did the automobile insurers start giving back money to their policyholders?
We did it because it was the right thing to do. I mean, we immediately saw driving vehicle miles traveled go down 40%. It went back up pretty quickly to 20, et cetera. But we sat down and said, okay, we don't want margins that big. It's not the right thing to do. We want to be competitively priced. And so we gave 20% credits for both April and May. And then subsequently, we're very analytically driven. So we went sort of state by state, channel by channel, product by product. And so far we've had rate decreases in about 35 states. And those are baked in permanently.